Welcome to Shadow of Truth with your host Rory Hall from thedailycoin.org and Dave Franzler from investmentresearchdynamics.com. And today is Thursday, November the 3rd, 2016. And this is our Thursday market update. And we certainly appreciate you being here. The unintended consequences of what happened last Friday when Comey came out and made his grand announcement about Hitlery and gold and silver both have responded. I don't think that was part of the inner workings that Comey was looking at. As far as I'm sure it wasn't. You know, in that conversation that we had with Titus the other day, I mean, we went through all the possibilities of him having to, you know, think about this and look at the bigger picture, and you know, going back on what he did just a few months ago to doing a complete 180 from, you know, there's no intent here to yes, there's lots of intent, and we're gonna pursue it. And I'm sure that in his thought process that he didn't think about the reaction to gold and silver, and it seems like that they have really caught fire since he made his big announcement. Or is there something else at play here?
Yeah, no, you know, the popular mainstream media narrative is that, you know, that they're trying to politicize everything and turn everything into politics. And gold and silver are about economics,
right? And
it's not
gold is about uncertainty.
Gold and silver, well, there's a couple factors going on here. You know, gold and silver have been suppressed in price, and the market has been artificially held below where it would be if it were allowed to trade freely and naturally. That there's always going to be upward pressure on the price of gold, no matter what, because it's just so it's so underpriced relative to the supply and demand fundamentals of the metal itself, and they've managed to convert a large portion of the Western investment world into paper gold and silver, so they can manufacture their own supply. What they didn't anticipate was the massive vacuum of physical gold they were going to have to deliver into Asia in the Eastern Hemisphere. And so if there's a bottom that gold hits, there's a floor there that's based on actual physical supply and demand. And it's not about politics or Clinton or Trump. I mean, this whole thing, you know, I don't know, probably 6 months ago, you started seeing articles about, you know, what'll gold do if Trump's elected? What'll gold do if Clinton's elected? It has nothing to do with any of that, because the fact of the matter is the dollar's overvalued relative to everything else, because the U.S. financial condition is in as bad a shape as any country out there,
if not worse.
The only thing keeping us alive is the ability to print more dollars. So I think what happened is you had a pretty good run up, a pretty good bounce in gold, let me take that back. You had a pretty good sell off in gold from the run up that we had starting in mid-December. And the pullback was, I don't know, I haven't run the numbers, maybe a 15% pullback, where we peaked at 1380 and we got down to, call it
somewhere around 1250 or below.
Yeah, 1250. So let's say we went down $130.
About 10%, 10, 12%.
Well, it's going to be less than that. So you had about a 9% pullback. I mean, it was due for even just a technical bounce, but I think it's a technical bounce that's also supported by fundamentals. So, and that's, I mean, you know, if you were looking for, everyone in the media needs to find a catalyst. Oh, why did, and they want to tie it into what's going on with the election. Well, that's a bunch of BS, because the dollar actually has had a pretty massive sell off in the last week or so. And that's not really being reported in the media. So, I think the bounce that we got in gold, or the move higher in gold, and I think it's going to go a lot higher from here.
I think so too. I mean, like I said, if you look at the chart from this morning, I mean, I just happened to look at it or about 2 hours ago, and it was going down, and then about an hour ago, both of them hit bottom and started going right back up, and it was like, well, that's interesting. So, and it seems that, I mean, silver, it doesn't look like it went below $18. It may have gotten just below it, but it wasn't very much. If it did, and then gold looks like it hit somewhere around 1285, 1286, and right back up.
Yeah, and you're using the Kitco sort of pseudo spot prices. The futures are really.
Yeah, I don't have all that fancy stuff like you do.
No, I give you. You go to investing.com and you can track the futures for free. But I wrote a blog post yesterday where I had the dollar index numbers, and as of yesterday, and it's bounced a little bit today, but as of yesterday, it was down 1.7% in 3 days, 3 trading days, and that's a big move for currencies. And it was down 2.3% versus the euro in 5 trading days, and it was down 2% versus the yen in 2 days, and it was down nearly 2% versus the Swiss franc since Sunday night. So there's natural underlying weakness in the dollar, and if you wanted to connect that to the political chaos that's erupted, there's probably some validity there. But what's going on at the political level in any country, ultimately reflects what's going on in the underlying economic fabric of the country. You know what I mean?
Yes, and that makes perfect sense.
Right. So, and that, the thing of it is, they're at a point now where I don't think they can't push gold any lower than they had it at the end of December. And I don't know that they can push gold much lower than where it is now. If they were to stop manipulating at all, gold would go straight up and go parabolic. And everyone would say, oh, this is a bubble. But it's not, because at some point, water always finds its own level. Every dam that's ever been built eventually breaks. And so at some point, the manipulation dam that they've built is going to break, and we're going to see spectacular moves in this thing. But in the meantime, I think all they can do right now, especially in the face of the demand that's reignited in India, which I thought I knew would happen. I was just a little early in my forecast on it, as I usually am in this stuff. China's back to business as usual. And what's interesting, and it's something that I haven't seen in a while, probably at least 2 years, 18 months, is that Vietnam is now all of a sudden, there's a lot of gold going into Vietnam right now. Most people don't know this, but Vietnam's the world's 5th largest importer of gold. And this John Brimlow report that we get is how I monitor what's going on in Vietnam, and the premium for what's being paid for gold over there is almost $50 above world spot, and I haven't seen premiums over there in a while. I've seen them as high as over $100, and it's usually doesn't last very long. But say over the last 10 years, the typical premium over there is anywhere between $20 and $70. So, again, the Eastern Hemisphere is their appetite has perked up again quite a bit, and we're seeing that reflected in the actual price that's being paid for physical gold over in those countries, because Vietnam, India, and China, the price of gold over there is trading at a nice healthy premium over the spot price.
Yeah, and Harvey Organ has started keeping up with the Shanghai futures and reports every day as far as the growing arbitrage between the COMEX LBMA and the physical market that is the Shanghai Futures Exchange. And gold has been holding steady. The difference is about $4 an ounce, which is not that much right now. But silver's been north of 50 cents an ounce for a long time, couple weeks, and it got up to about 84, 85 cents an ounce difference about 5 or 6 days ago. And it seems like that market is going to continue, that arbitrage is going to continue to grow because, like you were saying, discussing with Vietnam and their appetite. I mean, that has to change. I mean, they're not going to continue to pay that premium if they don't have to, or the rest of the market is going to come up to meet that, or am I just way off base with that? I mean, something's got to change.
Something will eventually change. Just to back up for a second, in the context of the Shanghai Gold Exchange, a $4 premium over there is pretty high on a relative basis. I mean, typically the premiums over there on the SGE range anywhere from, say $2 down, and then if sometimes it goes negative, which means there's not much demand for gold at that point in time, but it changes on a daily basis. $4 over there is actually a very, very healthy premium for gold.
Well, and it's been holding that for all week at least, if not longer.
Yeah, it's been $3 to $4 for sure.
I mean, and that so I didn't realize that was that. I look at it and go, well, okay, it's $1,300, so $4, that's not that big a deal. But when you're talking about silver and it's 60 cents, 70 cents, 80 cents an ounce over, that's a pretty big deal.
Yeah.
I mean, I was just looking at it from that perspective. So thank you for the clarification. I mean, it seems like that is going to just continue to move forward, and that market is going to eventually get to a point to where, say, a $15 premium on the Shanghai Gold Exchange, I mean, that would be fairly significant according to what you were just saying. I mean, that would be 3 times where it is right now, or 4 times where it is right now. And if you're saying that a $4 premium is significant, then a $15, $16 premium would be gargantuan.
Yeah, I don't know if we'll ever see that. If we see premiums like that, it probably means the COMEX defaulted or something. But getting back to their attempts at manipulating this market, I mean, it's become as blatant as the political corruption has become blatant. And so, for instance, yesterday, what they've been doing for several years now is they'll go in and they'll start smashing the mining stocks, half a day or a day ahead of trying to smash gold. And yesterday, the Huey index was, I think at one point it was up 7 or 8 points, and it ended up closing down about 4 points. And when I saw it start to go negative, I said to my colleagues that one of them is the guy that I manage a fund with. I said, "Well, gold and silver are next," and they started hitting gold and silver, and then it bounced last night in early Asian trading, and then I woke up this morning and it was down quite a bit from its overnight highs. But the point here is that what they were doing in the mining stocks kind of telegraphed what they were going to try to do with the metals. Now, what's interesting about that, and this is something that I've noticed, it's been happening for about the last probably 12 to 15 months, is a lot of times when they'll smack the Huey, it'll bounce back pretty quickly the next day. And that's what's happened today, because the Huey's up over two and a half, almost 2.5% right now. And we're starting to see, like as you mentioned, gold and silver are well off their lows from earlier this morning. And so to me, that kind of indicates that, despite their attempts to manipulate and take everything lower in this sector, the market's not going to let them do it. So I think we're going to go higher for at least a while.
You think we're going to see that through the end of the year? Is that possible?
Sure. I mean, this Indian festival and wedding season goes through
It goes through
pretty much
March.
New Year's. That, and then China has a seasonal period that kicks in after, in January, and then you get a lull in February and March, and then there's another, probably the second largest seasonal buying period for India starts to kick in. But again, this is the type of thing where at any point that manipulation dam could break, and will it happen this time? I don't know. I mean, if you had told me 15 years ago that they'd still be able to, hold down the price of gold and silver like they are, I'd say you're crazy. But, then again, gold's up 600% and silver's up more than 400% from where it was 15 years ago. So, or do they win battles? Yeah, they win some battles, but they're losing the war.
They're definitely losing the war. If you, go back and look at the lows, like you were talking about, the late 90s, early 2000s, I mean, it's way ahead.
Exactly.
Probably, I mean, it is the best performing. They're gold and silver, the two best performing assets during that time.
Since 2001, they have been. There's probably some odd duck commodities that have performed better, but nothing that anyone would put money into to preserve wealth. Well, are we gonna start our new trend of keeping our show a lot shorter for the benefit of our listeners?
So we don't beat them up too much.
Either that or put them to sleep. Probably more likely.
Well, all right. Well, I guess we'll stop there then. That's all. That's it.
That sounds good to me.
Pick it up on Monday and see where we stand.
That's right. Next week after Monday, things will look a little bit different in this country, and that'll be interesting to see.
That will definitely be interesting to see. We may have to do a special show on the follow-up on the Wednesday to see
do a Wednesday show instead of a Thursday show?
Yeah, let's do that.
All right.
All right, dude. Well, have a good weekend, and I'll talk to you on Monday.
Likewise.